This hearing will come to order. Today we are joined by the leading voices within the administration on reforming and strengthening our housing finance system. The Secretary of the Treasury and the Secretary of Housing and Urban Development, both of whom have just submitted housing finance reform proposals to the President, as well as the Director of the Federal Housing Finance Agency, who serves as the regulator and conservator of Fannie Mae and Freddie Mac. I want to thank each of you for coming to the committee this morning. Last Friday marked 11 years since the government bailed out and put Fannie Mae and Freddie Mac into conservatorship, where they remain today. Prior to 2008, the two government-sponsored enterprises held just 45 cents in capital for every $100 in mortgages they guaranteed. Now, they hold just 19 cents after a historic $200 billion bailout from the taxpayers. 11 years later, these systemically important companies continue to be too big to fail and are even more leveraged than they were before the financial crisis. And taxpayers inevitably remain on the hook in the event of the next market downturn. In March, President Trump signed a presidential memorandum directing the Department of the Treasury and the Department of Housing and Urban Development to develop a plan for administrative and legislative reform of the federal housing finance system. Many of the legislative recommendations in the plans that were released on Thursday are consistent with my outline to fix our housing finance system, including attracting private capital back into the market, protecting taxpayers against future bailouts, and promoting competition, as well as preserving certain important incremental reforms that have already taken place during the conservatorship, including a robust transfer of credit risk, the single security and common securitization platform, and loan pricing that does not vary based on lender's size. The status quo is not and has not been acceptable, and my strong preference remains to fix it through comprehensive legislation. 5 years ago, this committee demonstrated that is possible. We came together to advance a comprehensive solution on this topic. This year, I released my housing reform outline, which builds upon many of the same principles of those previous efforts. It sets out a blueprint for permanent, sustainable new housing financing, a system that protects taxpayers by reducing the systemic, too-big-to-fail risk posed by the current mortgage guarantors. It preserves the existing infrastructure in the housing finance system that works well, while significantly increasing the role of private capital. It establishes several new layers of protection between mortgage credit and risk and taxpayers. It ensures a level playing field for originators of all sizes and types, while also locking in uniform, responsible underwriting standards. And it promotes broad accessibility to mortgage credit, including in underserved markets. Ultimately, only Congress has the tools to necessarily provide the holistic, comprehensive reform to our system that will be durable through any market cycle. However, it is important for the administration to begin moving forward with incremental steps that move the system in the right direction. After 11 years of conservatorship, it's long past time to make the hard decisions and address this last unfinished business of the last financial crisis. Senator Brown.
Thank you, Mr. Chairman. Welcome to the witnesses. Welcome back to my colleagues. We're going to hear from the Trump administration today about the next steps on housing finance reform. It's clear from the plan they put out last week what President Trump thinks these steps should be. The Trump plan will make mortgages more expensive and harder to get. We shouldn't have to tell the president we have an affordable housing crisis in this country. We all know it. We all see it. I see it when I talk to residents of a manufactured housing community on the verge of losing their homes because they can't afford the rent increase imposed by wealthy private equity investors from outside their states who just bought their community. I see it when I drive past the boarded-up houses that belong to the victims of predatory lending in my home city of Cleveland in my neighborhood of Slavic Village, and it happens across the country. I see it when I talk to young people in their 20s and 30s who want to buy a home, but who drown in student debt and can't save enough for a down payment or afford a mortgage. These are the real crises facing real families all across Ohio and across our country. They're renters, they're homeowners, they're former homeowners. They all have one thing in common: they can't afford a place to call home. We've had productive hearings in this committee where we talked about what it would take for the housing finance system to actually work for working families. In March, we held 2 hearings with representatives from the home builders, the realtors, the mortgage bankers, the credit unions, the civil rights communities, and multifamily lenders. We heard during those hearings that affordability and access aren't just components of housing finance, they're the whole reason we have a housing finance system. They can't be an afterthought once we've answered other questions about the structure of the housing finance system. They have to be built into the system. We need a housing system built on a mission to serve borrowers and renters, no matter who they are, what kind of work they do, where they live. That means we need policies that focus on increasing service for underserved markets, like rural areas and manufactured housing homeowners, and borrowers who have been locked out of the market for decades because of discrimination. And we need a system that helps a wide variety of lenders and borrowers participate so that they can meet all families' needs, particularly those who have been left behind for generations. In our March hearings, in the hearings since, we've heard housing stakeholders remarkably coalescing around a few foundational principles for reform. They have said reform should protect access to affordable 30-year fixed-rate mortgages. They've said that reform should provide a catastrophic government guarantee. They said that we should structure loan guarantors like public utilities, providing a regulated rate of return. They said we should serve a broad national market. They said we should serve lenders of all types and sizes equitably. They said we should maintain a duty to serve all markets and all borrowers. They have said we should maintain affordable housing goals and metrics. They've said we should expand investment in affordable housing. And they said we should maintain the GSE's successful multifamily business models and ensure continued or better access for financing of affordable rental housing. Yet, unsurprisingly, President Trump and his administration missed the point. Rather than create a system that addresses the needs of working families, the Trump administration has put out half-baked proposals that will make mortgages more expensive and harder to get. In addition to increasing costs, the plan would make it harder for small lenders to compete and would gut the existing tools we have now to help underserved families finally find an affordable apartment or own their first home. The president's plans would also roll back consumer protections and investor disclosures put in place following the financial crisis. And as we know, there's been a collective amnesia on this committee and in this administration to prevent predatory loans and toxic securities from building up our financial system. So let's be clear, whether you're renting or want to buy a home or own a home and someday want to sell it, President Trump's plan hurts you. All to funnel, no surprise here, all to funnel more money to the same Wall Street system that wrecked the housing market and wrecked families' lives in 2008. I was encouraged when I saw the Treasury's plan had 9 separate proposals dedicated as leveling the playing field. I thought this might mean, maybe hope against hope, might mean leveling the playing field for communities of color, young households trapped by student debt, or renters who can't afford to save for a down payment. So you can imagine my disappointment when I saw that all 9 proposals, every last one of them, was about leveling the playing field for Wall Street, which is looking to make more money off of working families' mortgages. Really? Of course, we shouldn't be surprised the White House looks like a retreat for Wall Street executives. Ultimately, this plan is the same as every other Trump administration plan. It's about making it easier for Wall Street, the president's home city, making it easier for Wall Street to profit off hardworking families. These plans come in the midst of a flurry of other troubling administration proposals to weaken fair housing and fair lending protections, to gut a bedrock civil rights law, the Community Reinvestment Act. Taken together, the president is once again once again decided to betray working families in Youngstown, in Cleveland, and Baltimore. Baltimore, Secretary Carson, Baltimore, the city that the president finds is so beloved, once again decided with Wall Street, once again decided to side with Wall Street wealth over the dignity of work. We don't need to make it easier for Wall Street to get richer. We need to quote Secretary Carson, newsflash, rich people are going to get richer anyway. We need to make it easier for every American family to find an affordable place to call home. Housing shouldn't be optional. It's a basic need. No one should go without it in this great country. Thank you, Mr. President. Thank you, Mr. Chairman.
Our witnesses today are the Honorable Stephen T. Mnuchin, Secretary of the Treasury, the Honorable Benjamin S. Carson, Secretary of Housing and Urban Development, and the Honorable Mark A. Calabria, the Director of the Federal Housing Finance Agency. Secretary Mnuchin, you may begin.
Thank you. Chairman Crapo, Ranking Member Brown, and members of the committee, I am pleased to be with you today to discuss the Treasury Department's Housing Finance Reform Plan that will protect taxpayers and foster competition in the market. I'd like to thank Chairman Crapo and the committee for your work on this important issue. The outline you released in February was a productive step towards ensuring the safety and stability of our housing finance system. In September of 2008, the government-sponsored enterprises Fannie Mae and Freddie Mac were placed into conservatorship by FHFA. Treasury has provided the GSEs with over $190 billion in taxpayer assistance. 11 years later, the GSEs remain in conservatorship and continue to be supported by a Treasury commitment to keep them solvent. The continued conservatorships of the GSEs have perpetuated far-reaching government influence over the housing finance sector. The lack of reform has left taxpayers exposed to future bailouts. Treasury Housing's plan includes almost 50 recommended actions. These measures would reduce the role of the federal government, enhance taxpayer protection against future bailouts, increase private sector competition in the housing system. As required by President Trump's directive, Treasury plan shows that the GSEs can and should be reformed to ensure their safety and soundness. Although no law prescribes a specific endpoint for the conservatorships, no conservatorship is meant to be permanent, and that includes FHFA's management of the GSEs. The plan provides a roadmap to release them from conservatorship. Treasury's reform plan takes great care to preserve what works in the system. Each of the Treasury's recommended reforms is incremental, realistic, and balanced. In particular, the Treasury plan would preserve the long-standing government support of the 30-year fixed-rate mortgage loan. That support should be explicitly defined, tailored, and paid for. Treasury recommends that Congress authorize an explicit paid-for guarantee backed by the full faith and credit of the federal government that is limited to the timely payment of principal and interest on qualifying mortgage-backed securities. To foster competition, this guarantee should be available to the GSEs and also to any other FHFA-approved competitor. Moreover, the regulatory environment should be harmonized so that GSEs and private sector competitors operate on a level playing field. For example, the GSEs currently have a competitive advantage over other participants under the so-called QM patch to the Consumer Protection Finance Bureau's ability to repay rule. In July 2019, the CFPB announced that the QM patch would expire in January 21 or after a short extension. Treasury supports the CFPB's planned expiration of the QM patch, and it also supports further revisions to the ability to repay rule to ensure that mortgage lenders continue to have a bright line safe harbor after the QM patch. Finally, I must emphasize, our recommendations make it clear that the administration's preference is to work with Congress to enact comprehensive housing reform legislation. Legislation could achieve long-lasting structural reform that tailors explicit government support of the secondary market and repeals GSE's congressional charters and other statutory privileges that give them competitive advantage. At the same time, we believe that reform can and should proceed administratively. Pending legislation, Treasury will continue to support FHFA's administrative actions to enhance regulation, promote private sector competition, and satisfy the preconditions set forth in the plan for ending the GSE's conservatorship. Under the leadership of the President, I am proud of all the work we have done to create conditions for greater economic growth, more and better opportunities for working families, and higher wages for all Americans. Today, I look forward to discussing with you the critical issues of housing finance reform. I truly hope that the committee will work with us on a bipartisan basis to move forward with legislation. Thank you very much, and I look forward to answering your questions.
Thank you, Secretary Mnuchin. Secretary Carson.
Ranking Member Brown and members of the committee, thank you for this opportunity to appear before you today to discuss how the U.S. Department of Housing and Urban Development will support this administration's efforts to reform the nation's housing finance system. Also want to thank the tremendous team that we've assembled at HUD. I always say we have the ugliest building but the best people. And especially special shout out to Mike Kelly, whose birthday is today. In the years since the financial crisis, the federal government has continued to play an outsized role in the nation's housing finance system. It is imperative that Congress and administration act to refocus this system, that we support appropriate and responsible access to credit, and ensure government programs do not overlap with and crowd out private capital. I'm pleased to present an overview of HUD's housing finance reform plan we submitted to the President last week. HUD supports millions of families with affordable home ownership opportunities through the Federal Housing Administration and Ginnie Mae providing credit access and liquidity in the mortgage market. During the financial crisis, and because of the policies of the previous administration, FHA and Ginnie Mae's balance sheet swelled, growing to approximately 350% and 400% respectively between the years of 2007 and 2018. Our reform plan will reduce the federal government's outsized role in housing finance and protect taxpayers. To that end, I asked Congress to work with the administration on 4 key pillars. Number 1, return FHA to its core mission of serving low and moderate income families, including first-time home buyers who cannot be served through traditional underwriting, to protect American taxpayers, number 2, from the risk of bailouts, number 3, to provide FHA and Ginnie Mae with the tools they need to manage the risk associated with oversized portfolios, and 4, to provide liquidity to the housing finance system. Our housing finance reform plan contains many recommendations, but for the sake of my oral testimony today, let me focus on just a few. First, return FHA to its core mission. We ought to allow the private market to work, and in those areas where it can't or won't work, we must make certain that we target programs to borrowers not served by traditional underwriting. Historically, this has been FHA's most important contribution to the American housing market, facilitating earlier entry into home ownership for these families, particularly first-time home buyers. Without FHA mortgage insurance, millions of lower income and middle income families would lack access to affordable mortgage credit. Refocusing on its core mission will strengthen FHA's ability to help creditworthy borrowers build equity and avoid foreclosure. Second, a central principle of our plan is that federal mortgage credit policies should be better coordinated in order to allow qualified borrowers to access responsible and affordable credit options. Our plan proposes that HUD and FHFA will coordinate to ensure Fannie Mae, Freddie Mac, and FHA serve defined roles within the marketplace. HUD recommends that Congress establish FHA, the Department of Veterans Affairs, and the Department of Agriculture as the sole source of low down payment financing for borrowers not served by the conventional mortgage market. Third, to better protect taxpayers, we need to strengthen FHA's risk management systems. FHA currently insures more than $1.4 trillion in mortgage debt. Meanwhile, Ginnie Mae guarantees more than $2 trillion in mortgage-backed securities. It is imperative that FHA and Ginnie Mae conduct their business in a manner that protects American taxpayers. FHA must maintain an appropriate level of capital reserves. It is unacceptable for the agency to ever again require a draw upon taxpayer funds to sustain its book of business as it did in the previous administration. Our plan strengthens FHA governance and builds its capital ratio well above the statutory 2% minimum to safeguard the agency against episodes of market decrease. To fulfill this duty to taxpayers and to ensure it continues to provide affordable access to mortgage credit for mission-focused borrowers, FHA needs some independence from broader HUD protocols that governing staffing, procurement, and technology. Therefore, our plan is recommended that Congress enact legislation that would restructure FHA as an autonomous government-owned corporation within HUD. In conclusion, the presidential memorandum provides an opportunity for Congress and administration to work together to ensure FHA and Ginnie Mae serve their important missions effectively, responsibly, and sustainably. I welcome Congress's participation in this administration's reforms. These agencies are better able to fulfill their responsibilities to borrowers and to the American taxpayers with that cooperation. Thank you, and I look forward to answering your questions.
Thank you, Secretary Carson. Director Calabria.
Chairman Crapo, Ranking Member Brown, and distinguished members of the committee, thank you for the invitation to appear at this morning's hearing. I can think of few issues in our financial system deserving of more attention. Our nation's housing finance system is in urgent need of reform. The status quo poses significant risks to taxpayers, homeowners, renters, and the entire financial system. I want to thank Secretary Mnuchin and Secretary Carson for their efforts to develop comprehensive housing finance reform plans. They lay out a responsible roadmap to build a more resilient housing finance system that protects taxpayers and maintains access. I also want to thank Secretary Mnuchin for the opportunity to have offered commentary on the Treasury during its development. These plans are broadly consistent with my top priorities. First of all is to cement FHFA as a world-class regulator. Second, to restore Fannie and Freddie to safe and sound condition by building capital to match their risk profiles. Building capital would also begin the process to end the conservatorships, which have lasted more than 11 years. I'll note by comparison, the longest bank conservatorship was 18 months. A root cause of the 2008 financial crisis was imprudent mortgage lending backed by insufficient capital. I believe that this fundamental problem remains unresolved today. While borrower average credit scores have modestly improved, the enterprise's share of low down payment and high debt-to-income mortgages are back to their 2004 levels, fueling rapidly rising house prices with easy mortgage credit from undercapitalized enterprises is a mistake, and it will end in disaster. In their current financial condition, the enterprises are not equipped to withstand a downturn in the housing market. The enterprises own or guarantee a combined $5.5 trillion in single-family and multifamily mortgages out of a $12 trillion combined market. Yet with just $6 billion in allowable capital, the enterprises approach a combined leverage ratio of nearly 1,000 to 1. In comparison, our nation's largest financial institutions have a leverage ratio of 10 to 1. The most recent DFAST stress tests for the GSEs, I think, illustrate this example. In the last crisis, housing prices declined by about 27%. The DFAST results model a 25% decline. Under such conditions, the enterprises lose over $40 billion in capital. Given that the housing supply, in my opinion, has become more inelastic since the crisis, we should actually expect greater price volatility going forward. Let me also emphasize that our current mortgage finance system undercuts sustainable homeownership. The enterprises have expanded with the economy recently, yet maintain risk and capital levels that ensure that they will fail in a downturn. This pro-cyclical pattern harms low-income borrowers, making it easier to extend credit when the economy is strong, but harder to keep those homes when the economy is weakened. Our housing finance system is supposed to serve homeowners and renters while protecting taxpayers. In my view, it does neither. The administration's plan aims to address these problems, and I applaud them for their efforts. Congress, however, is the only body that can enact the structural reforms that are needed to fix today's broken system. Compared to the duopoly of the enterprises, a fair and competitive secondary mortgage market would better serve borrowers and renters and promote long-term stability by ensuring that inefficient firms do not survive and that no firm is too big to fail. The ranking member mentioned increasing service and access, a goal I share. I think we have witnessed in one industry after another that the best guarantee for increasing access and lowering prices is an open, competitive market, not a monopoly, not a duopoly. Some would argue that reform should wait for a crisis. I believe that this would be short-sighted. We have found in the last crisis that it is difficult to do reform in the midst of a crisis. To paraphrase President Kennedy, the time to repair the roof is when the sun is shining. Now is the time for needed reforms because our economy and housing market are strong. This will not always be the case. While I am, of course, not forecasting a downturn, I do believe it's my responsibility as a prudential regulator to hope for the best, but to prepare for the worst. Therefore, I intend fulfilling my statutory duties to strengthen FHFA, enable the enterprises to build capital to match their risk profiles, and to end the conservatorships. These reforms are critical to building a resilient mortgage finance system that protects taxpayers and delivers a diverse range of housing options at affordable prices. In the interim, I believe modest reforms can help me do my job better. For instance, in June, I asked Congress for the authority, similar to other financial regulators, to develop broader capital standards and to charter new enterprises. These common sense proposals that other financial regulators have these powers need not wait for broader reform. In far too many areas of our nation, we face an affordable housing crisis. Too often, this has been the result of misguided local land use and building regulations. In other areas, housing supply remains constrained to a lack of construction labor. For the enterprises to play an important role in addressing this crisis, they themselves must be fixed. Adding more weight to an already cracked foundation is to invite collapse. Thank you again for the opportunity to testify, and I look forward to your questions.
Thank you, Director Calabria. My first question is to all three of you. And this could be a yes or no answer, but feel free to elaborate if you'd like to clarify. Do you all agree that Fannie Mae and Freddie Mac are systemically important companies, that they continue to be too big to fail, and are even more leveraged now than they were before the financial crisis? Secretary Mnuchin.
Yes, in their current form, I do.
I would agree as well.
Yes, in their current form.
All right, thank you. I think I heard you each say this, but I want to ask it again. Do you each agree that the ideal outcome is for Congress to reach a comprehensive solution?
I absolutely support that.
I think that would be the best permanent outcome.
I would emphasize that I believe only Congress can reach a comprehensive solution.
So by saying that, Director Calabria, that doesn't mean that the administration and the appropriate regulatory agencies can't make significant steps.
Absolutely correct.
And that leads to my next question, and that is, as we work to get a solution here in Congress, do you also agree that it's time for the administration to act and to start building the foundation and taking the necessary steps that it can take in order to address this issue and actually help Congress get to a comprehensive solution?
We absolutely feel it's our responsibility to work both tracks, but our priority is to work with Congress on a bipartisan basis, and we will do everything we can to achieve that.
Thank you, Secretary Carson.
And I think, housing is obviously very important to everybody across any political spectrum. And anything that we do is going to be questioned as biased. So, yes, working with Congress is going to be the best way to do it.
Absolutely, Mr. Chairman. I think that the administration should move forward. I should move forward. I will tell you, as a safety and soundness regulator, when I look at a $3 trillion institution that is leveraged 1,000 to 1, it keeps me up at night. So my focus is fixing that.
Well, thank you, and I'll answer that same question back to you. I also believe that while it's the proper role for Congress to solve this, and that only Congress can give the comprehensive solution that is needed, there are significant reforms that can be accomplished and can help actually move us in the direction of the reform that I've outlined in my outline and that I believe we need to achieve here in Congress. And I encourage you to act and to help us to get to that point. In that context, and this question really is probably more specifically to Treasury and HUD, I'd like you to talk a little bit about what the next steps that can be taken should be. And in that, again, in that context, it seems to me that a couple of the important ones that I've identified in your reports and in the discussion are capital and amending the PSPAs. But whatever your answer to the question is, what do you believe we should start seeing prompt action on?
So our priority is to make sure that the GSEs have more capital. We are in active discussions with the director and the FHFA about renegotiating our agreements with them, which would allow for removing the net worth sweeps so that we would allow a significant amount of capital be accumulated, but in return for that, make sure that the taxpayers are compensated for the ongoing Treasury support. And that is something that the director and I hope to achieve very quickly.
Secretary Carson.
I think the most important things are obviously refocusing Ginnie Mae and FHA on our primary mission, which is providing the opportunities for capital and credit to be extended to non-traditional markets. Also providing the tools to these two entities that are necessary to deal with the various risks associated with management. Providing liquidity to the world's largest financial market, and protecting the taxpayers. That's really what a lot of this is all about, and what happened the last time around should never be allowed to happen again.
Thank you. And in my last 30 seconds, I didn't mean to leave you out, Director. You've got a major role here.
Thank you, Mr. Chairman. Absolutely, my primary focus at first is going to be trying to build capital, but also trying to make sure that FHFA as an agency is ready for a post-conservatorship world in terms of our supervision function, in terms of the powers we have, and in the terms of powers we may ask you that we may need.
All right, thank you. I made it with 10 seconds to go, Senator Brown.
I probably won't, Mr. Secretary. Thank you. Secretary Mnuchin, Secretary Carson. Presidential memorandum that directed your agencies to complete the plans we discussed today said those plans were to be submitted to the President for his approval. Question to the two of you, has the President approved your plan? Secretary?
We have briefed the President, and he has accepted the plans.
He has approved it.
Well, I believe
Is accepted, approved? Let me ask the question. Has he approved the plan, yes or no?
I don't know if he explicitly approved the plan. We'll get back that to you.
Secretary Carson.
We briefed the President, and he accepted the plans.
So you handed it to him, and he said, thank you for the plan. Okay.
No, not we handed it to him. We briefed him. Okay. The Secretary and I went through and extensively briefed him.
Okay, I get it. Secretary Carson?
I agree.
Okay. So is it possible he didn't approve the plan because he and his in-depth knowledge of finance and all things government knows they'll make mortgages more expensive and harder to get? Perhaps. I just, you know, if the GSEs and FHA cut out their most profitable lines of business and still have to cover their costs, they'll have to raise rates on the borrowers who are left. I mean, that's clear. It seems to me that you can't come here and say the President approved the plan, even though he wanted the whole process would be so that he approved it, because the whole argument comes down to trust Wall Street. Just trust Wall Street doesn't really work these days. We should know. Let me, Secretary Mnuchin, the majority of new households formed between now and 2030 will be headed by people of color. We already have a 30-point gap in home ownership between black and white households, 25+% gap between Hispanic and non-Hispanic white households. This isn't mentioned in either of these plans. In your press release, you said the Treasury Department met with a wide range of stakeholders, including affordable housing advocates, unquote. How does your plan reflect the priority of civil rights organizations and the need for affordable housing and community development and credit access for people of color?
Well, let me first just comment, we disagree that this is going to raise mortgage rates, and that we want to be very clear that we are very careful. We support the 30-year mortgage, and we're not going to do anything to jeopardize that for hardworking Americans. Also, we very much support the duty to serve as well as affordable housing goals, and we look forward to looking with you.
Not a lot of evidence that you support those.
Well, I believe we do. Matter of fact, we specifically say in the report, okay, that we believe in affordable housing, but we think that they should be replaced with something that has more efficient, transparent, and accountable. We want to make sure that affordable housing goals are met and that the money is being used carefully. And I look forward to working with you. So if you have ideas how we can do this in a better way, we look forward to working with you.
Well, we do. There was consensus as I laid out my opening statement, and your staff, I don't know how much of this you read, but your staff certainly saw this, watched, or at least is informed of those hearings where there was consensus among almost the entire panels in the whole industry that we could do these things. And you pretty much ignored that in this. But go back to this question. Why no mention of people of color in this gap?
I think we've referenced the duty to serve. That's a very important issue that you've outlined, and this is something that we look forward to working with you on. I would say our priority is to make sure we maintain affordable housing and duty to serve, but also to make sure that the taxpayers are not at continued risk and we don't have another bailout of these entities.
Secretary Mnuchin, your plan calls for shrinking Fannie and Freddie's role in the housing market, cutting back on their activities, opening up their underwriting systems for anyone else to use, giving away their data, giving price advantages to their new competitors. You also say the GSEs, all three of you said GSEs need more capital and suggest raising capital through an initial public offering or an IPO. You grew up in the private investor world. In the Wall Street world. You were a private investor. Would you invest in GSEs under the Trump administration's plan to shrink them and give away their assets?
I would.
And you think to raise the capital you say they need, you'd have to raise more money than any company in IPO history? Right after the Trump administration has shrunk their businesses and given away their most valuable assets in your sort of cream skimming privatization scheme that we've seen in other parts of their government? It just strikes me as highly, highly unlikely that they can raise that kind of, they can have that successful an IPO, that kind of money, considering what you've done. And Mr. Chairman, before I close, I'd like to enter into the record a letter from 22 civil rights and affordable housing organizations outlining their principles for reform, a letter from 8 civil rights organizations, the Urban League, the NAACP, Unidos USA, Center for Responsible Lending, National Fair Housing Alliance, National Community Reinvestment Coalition, National Capacity and the Leadership Conference on Civil and Human Rights. These letters outlines why these civil rights leaders, what they see as the essential elements of a sustainable, equitable housing finance system. Few of these priorities, as we've seen from Secretary Mnuchin's answers or non-answers, few of them appear in the President's housing plan.
Without objection. Senator Toomey.
Thank you very much, Mr. Chairman. Thank you to our witnesses. Mr. Chairman, first of all, thanks for kind of launching this conversation with your thoughts recently about how to move forward on GSE reform. I think what the Treasury report has laid out is a very, very constructive set of ideas that we ought to consider very seriously, and I want to thank all of our witnesses for contributing to that. Let me start by saying it's clear to me that it's a lack of housing stock more than a lack of subsidies that's the primary cause of an affordability problem, which is a real problem. Mm-hmm. But it's a government-inflicted problem. Now, typically it's state and local, but housing is not immune to laws of physics or laws of economics. If there's not sufficient supply to meet the existing demand, then it becomes more expensive, and vice versa. And I never cease to be amazed by the jurisdictions with the most severe affordability problems and the things they do to exacerbate the problems, like San Francisco blocking an affordable housing development because it casts a shadow on a park. Okay, that's going to make affordable housing more expensive. Or California as a whole requiring that all new houses have to have solar panels installed, thereby raising the cost of houses. And rent control, which clearly and obviously exacerbates housing shortages where it's imposed. So, first of all, I want to thank Dr. Carson for the important work that you've been doing in identifying impediments to the delivery of new affordable housing stock. And I guess I'd like to direct to Dr. Calabria, if there are things that we can be doing in the reform, acknowledging that I think most of these obstacles occur at the state and local level, are there things we can do to go to the fundamental underlying problem, which is inadequate supply?
First, let me say I couldn't agree with you more strongly that the fundamental problem is inadequate supply, and the primary driver of that is state-local regulations. And it really does concern me the damage that's being done to our economy and to affordability and access from these barriers. And this truly is causing an affordable housing crisis in many parts of this country. And so we have to recognize that while the mortgage market and mortgage finance does play a role, it cannot fix this problem by itself. I think the extent that we can encourage and work with localities, and again, I would applaud as well Secretary Carson's effort in this regard to try to bring some focus on trying to reform local land use and regulation.
So, as I understand, the Treasury report acknowledges that there is a statutory role to support affordability. But as I read it, the report identifies a flaw in the mechanism that the GSEs use. And as I think about it, it seems to me that our GSEs use an indirect subsidy. In other words, the subsidy doesn't go directly to people who have a low income. The subsidy tends to go to high credit risk loans. And you might think that high credit risk is a good proxy for low income, but it's really not, right? A very wealthy person can have an extraordinarily high risk loan.
Absolutely.
And a person of very modest means could have a very prudent and low risk loan. So isn't it true that we could design the subsidy in a more transparent, clear, and efficient fashion, that if we're going to provide a subsidy, it's actually targeting low-income folks rather than sort of distorting and arguably encouraging more high-risk transaction? And that's really for Dr. Calabria as well as Secretary Mnuchin.
Let me say, I absolutely agree. A handful of studies have looked at this question, and while the correlation between income and credit is positive, it is weak. And so you are right, there are plenty of high-income people who have poor credit and plenty of low-income people who have good credit. So I absolutely do believe we can better target the resources we have in a more efficient manner to try to get people in homeownership who wouldn't be there otherwise, and get them in sustainable homeownership.
And Secretary Mnuchin, it seemed like you were alluding to this dynamic a moment ago. Is there anything you want to add to that?
Senator Jimmy, I agree with you completely. First, we absolutely support wanting to make sure there is affordable housing, but we want to do it in the most effective way. And I think we'd all agree that the previous system did not work, and that's part of the reason why the GSEs got into trouble. So I would hope that this committee will work with us on a bipartisan basis to figure out what's the best way to deliver this support in affordable housing.
Thanks very much. I don't have enough time to get into my next line of question, Mr. Chairman, so I'll yield my last 13 seconds.
Senator Menendez.
Thank you. Thank you to our witnesses. I'd like to start with an important issue for New Jersey and many other communities represented by members on both sides of the committee. As part of your plan, Treasury is recommending that FHFA solicit information on whether to tailor support for higher principal balance loans, which any reasonable person would interpret to mean that Treasury is seeking to lower conforming loan limits. Doing so would have a seriously negative impact on the housing markets in states like New Jersey. So, Secretary Mnuchin, why would you recommend that the FHFA, quote, solicit information on whether the FHFA should effectively lower conforming loan limits if Director Calabria asserts that the FHFA does not have the authority to administratively change conforming loan limits?
Congress has the responsibility on loan limits, and any changes would require Congress. Having said that, we always think it's important to solicit information on the markets, and specifically in New Jersey, we don't want to do anything to jeopardize the housing markets in New Jersey, and I completely understand in the tri-state area the cost of living is significantly higher.
Yeah, it's not just the tri-state area. There are many places in the country in which
there are many, but I was just referring to New Jersey and the places around it.
For me, it's not just simply, it is an important local issue, but it's not a parochial issue alone. So you do agree then, as Director Calabria said in his testimony in his nomination hearing, that he does not have the authority to administratively change those conforming loan limits.
I'm going to defer to him on his legal analysis, but I think our legal analysis is that's Congress's responsibility.
Director Calabria is still the same as when you testified in your conference?
Yes, Senator.
Thank you very much. So we've established that. Now let me turn to the multifamily rental housing, which is a critical part of the housing market in New Jersey and across the country. More than 18 million households in the United States live in multifamily rental housing, including 1 million New Jerseyans. The GSEs play a vital role by ensuring that multifamily housing is widely available through the economic cycle. As you know, the multifamily businesses at Freddie and Fannie perform quite well and remain profitable during the worst of the financial crisis, a time in which we saw most private investors exit this segment of the market entirely. Secretary Mnuchin, the Treasury report recommends that Treasury and FHFA should consider limiting support of the GSE's multifamily business. We heard from witnesses before this very same committee in the multifamily industry in March that private capital alone cannot fill the void that would be left without GSE financing. And that would mean aggravating the housing crisis that already exists in states like New Jersey and across the country, leaving renters with fewer and more expensive housing options. Have you conducted any analysis on what private sector financing for the multifamily housing market would look like if the GSE's capacity to purchase multifamily loans is curtailed as described by your plan?
Well, I'm not sure we necessarily think it's curtailed. I think we just need to look at it in the risk context. And I know there are external people who thought the GSEs should get out of the multifamily business. I don't agree with that. I think that the GSEs absolutely need to be in the multifamily business. I would say that more broadly, there are issues given the GSE's exposure in multifamilies. There are obviously certain rent control rules and others that have now, I'm concerned, are going to limit the housing stock. So we absolutely
So you didn't conduct an analysis here. Let me ask you this other question as a follow-up then. What makes you confident that the private market can fill the void, or do you not believe that the private market can fill the void?
I'm not saying that the private market can or can't fill the void. What we're going to continue to do more analysis. We're just saying that we want to make sure that the GSEs have the appropriate risk. So we very much support multifamily lending with the GSEs.
Finally, Secretary Carson, on a different but urgent matter, in previous cases where lead was found in drinking water systems, federal assistance was critical in helping communities remediate their water systems and reduce potential lead exposure. As I'm sure you know, the city of Newark recently discovered elevated lead levels from some limited water samples. I've already called on the EPA to provide on-the-ground support and technical assistance, but I believe HUD needs to be part of the solution as well. In 2016, HUD assigned a full-time staff member to assist HUD residents in the greater Flint region and provide technical assistance to city and state agencies. So I want to ask you, Mr. Secretary, as the city of Newark and the surrounding communities continue to address this issue, would you commit that if HUD-assisted properties are affected, you will assign a full-time staff member to assist both HUD residents and city and state agencies looking to tailor their CDBG funding to mitigate the risks of lead?
Well, thank you, Senator, for your interest in this. And thank you for the help that you gave us on the carbon monoxide poisoning as well. As you've noted in our budgetary request over the last 2 to 3 years, we've placed a great deal of emphasis on lead and on communities that are affected by it. So I will commit to continuing to do that and continuing to raise the profile of this issue in New Jersey and elsewhere.
I appreciate that, but my specific question, Mr. Chairman, and I appreciate your indulgence a moment, is would you commit, as we did in Flint, to have a person who is designated for Newark and the surrounding communities that are affected by this to assist them as it relates to the flexibility that has been shown in the past in CDBG funding?
I will commit to doing everything that we possibly can do to alleviate the problem there. And if that involves a specific person or a dozen specific people, we will do what is necessary.
Thank you, Mr. Secretary.
Senator Cotton.
Thank you, Mr. Chairman, and thank you, gentlemen, for appearing here today. Thank you, Secretary Carson in particular, for coming down to Arkansas earlier this year. I want to return to an issue that Senator Toomey touched upon, and that's restrictions on supply in housing, and especially local restrictions. It sounded like we had some agreement between Senator Toomey, a well-known conservative mind when it comes to housing and finance policy, and our Republican witnesses. I just want to read from another statement about these restrictions and get your response to them, in particular Secretary Carson and Mr. Calabria. Locally constructed barriers to new housing development include beneficial environmental protections or well-intentioned permitting processes or historic preservation rules, but also laws plainly designed to exclude multifamily or affordable housing. Local policies acting as barriers to housing supply include land use restrictions that make developable land much more costly than it is inherently, zoning restrictions, off-street parking requirements, arbitrary or antiquated preservation regulations, residential conversion restrictions, and unnecessarily slow permitting processes. Secretary Carson, does that sound like a pretty good catalog of local restrictions that reduce affordable housing supply?
That sounds like a good catalog, and interestingly enough, what we've observed is in the areas that have the greatest affordable housing needs and the largest number of homeless people, we have the largest number of restrictions. You look at a place like San Francisco, the median home price in the San Francisco Bay Area is $1.6 million. And you look at Los Angeles with the requirements for solar paneling. And a lot of this, quite frankly, is because of NIMBYism. You know, not in my backyard. But NIMBYism is actually based on archaic thinking. They believe that the federal government still acts the way that it used to. You know, building these gigantic complexes with little forethought, afterthought, or intermediate thought or support. And that's not what's done anymore. Now we're talking about public-private partnerships. We're talking about multiple incomes. We're talking about conforming to the architectural and cultural issues in the area. We're not talking about putting a multifamily house or complex in the middle of single-family neighborhood. People have wrong impressions of what we're doing. We actually care about what people think, but it can be done in the right way so that firemen and policemen and nurses can live in the same neighborhood where they work. I think that actually enhances the community.
Mr. Calabria?
Let me say, I very fully agree, and I think part of the problem is, particularly in places like California, the process just has multiple vetoes where people can object and object to construction, and you do need streamlining of that. That said, I think we should look to cities that have done a good job. As Senator Smith is aware, Minneapolis recently has upzoned, and I think done a very smart mover there on a local level that will help affordable housing in that area. So I think there are good lessons to learn, as well as some lessons to learn in cities that don't work.
Well, that long catalog of local restrictions that retard the supply of affordable housing comes from none other than Barack Obama's White House housing plan in September of 2016. So I hope now that we have agreement between Barack Obama, Mark Calabria, Ben Carson, and Pat Toomey that we could try to address this problem perhaps by looking at ways to condition grants on more affordable housing policies at the local level. Another local policy, of course, is education policy. Anybody who has a child that's been going to school knows the pressure of getting in a good school district. I want to read a few quotes from a well-known book about the stress on middle-class families. In the overwhelming majority of cases, a bureaucrat picks the child's school, not a parent. The way for parents to exercise any choice is to buy a different home, which is exactly how the bidding wars started. The crisis in education is not only a crisis of reading and arithmetic, it is also a crisis of middle-class family economics. At the core of the problem is the time-honored rule that where you live dictates where you go to school. Any policy that loosens the ironclad relationship between location, 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 and school, school, school would eliminate the need for parents to pay an inflated price for a home just because it happens to lie within the boundaries of a desirable school district. A well-designed voucher program would fit the bill neatly. Fully funded vouchers would relieve parents from the terrible choice of leaving their kids in a lousy school or bankrupting themselves to escape those schools. If a meaningful public school voucher system were instituted, the U.S. housing market would change forever. Gentlemen, those quotes are from Senator Warren's book from 2003 in support of a school voucher program. I know that you don't do education policy, but do you agree that local education rules can negatively impact affordable housing prices?
I do, and let me also say her passages in that book on housing subsidies are a delightful read that I would encourage members of the committee to take a look at.
I know my time's expired, but perhaps you can find an ally on the other side of the aisle, along with Secretary DeVos, to both improve the quality of education in America and affordable housing. Thank you.
Thank you.
Senator Tester.
Thank you, Mr. Chairman, Ranking Member Brown, for being here. And I want to thank all the folks who are testifying today. I will tell you at the onset, it's good to have you in front of the committee. I wish we had you in front of the committee more often. It doesn't happen enough that we have folks from the administration here to visit with us. Dr. Carson, you're always welcome back in Montana, too.
Thank you.
You got a chance to see some rural housing. And I don't want to talk about housing in San Francisco or L.A. or Denver or New York City or Atlanta or Miami or Houston. I want to talk about housing in Miles City, in Plentywood, in Great Falls, in Billings, in Missoula, in Pablo, in Rocky Boy. Because quite frankly, we're talking about large cities and we've got just as big a crisis in rural America, if not worse, and nobody's paying attention to it. So I want to start with you, Secretary Mnuchin. When this plan was developed, how much effort was put into getting information from rural/frontier America on affordable housing?
Well, first let me say I enjoyed visiting many of those places during the president's campaign. So
Yes, you were there.
Montana,
And even during my campaign. I don't know if you were with him or not, but yeah.
So I very much appreciate and support. There shouldn't be a big city housing plan. There should be a housing plan.
But you're right. But the
impacts-
question is how much information did you gather when you developed this plan from rural/frontier areas? Because, you know, rural is the area between Baltimore and Washington, D.C. in some people's eyes. We don't have that kind of population in Montana, even our most populated areas. So how much information was gathered from?
I think we solicited from Variety, but I'm going to get back to you on the specifics.
I would
of areas. But I assure you, more importantly,
I would appreciate it.
I understand the point that you're trying
Yep.
to say, and this should very much help the people in Montana, not just the people in New York and California.
It's critical, and I will get into that in a second. But when it comes to regulation of like shadows and solar panels and rent control, those are really good issues for us to talk about here. But in Miles City, Montana, the only regulation is you can't build in a floodplain, okay? And we still don't have housing. So that's the point. And in your plan, and I just want to get an idea. You talked about the guarantors need to serve a national market, but then it's also suggested that Congress should not require guarantors to serve a national plan, but in individual markets. Where are you on that? And I assume what you're saying is that you want to have a rule that supports national service, but Congress should undermine that and make it individual markets.
No, that's not the case.
Tell me what it says.
We support the national concept, okay?
Yeah.
But we're looking at that and saying it can't just be a national plan. It also has to have specific plans, as you said, that impact places like Montana and make sure that they're not left behind.
So the intent was to promote more access for rural frontier
Yes.
areas.
Yes.
Could it be used to do exactly the opposite, though?
Well, that's not our intent. And as I said, our priority is to work with Congress so that there's clarity in these issues. We want to make sure whether it's this director or any other future director,
I just want to make
this.
sure, though, Secretary Mnuchin, that you're saying the right things right now. But the truth is, if you have a national plan and then it can be undermined to serve just individual markets, it looks to me like it would actually, money would flow to the bigger areas where there's more population.
That's not our intent. And again, working with Congress, we will refine and define these issues.
Okay, so let me talk about the 30-year fixed-rate mortgage for a second, because in the report, it ultimately suggests maintaining the 30-year fixed-rate mortgage, but it also says it's possible that the 30-year fixed-rate mortgage loan could remain widely available and at similar prices under a market structure that does not depend on government support. Can you tell me why this line is in there?
Well, I think there's, first of all, again, let me just emphasize, we very much support the 30-year mortgage.
Yeah, I got it.
Although I will say the 30-year mortgage might not be for everybody, and there are different products.
I
that
got
make
it, but
sense.
what I hear that saying is a 30-year fixed-rate mortgage could exist without any government backing. Do you guys believe that?
No, we don't. There could be parts of the 30-year mortgage market, i.e. the large jumbo market that do not need government guarantees and will have a 30-year mortgage.
So you would agree without that government backing of 30-year fixed-rate mortgage that it would have a pretty negative impact on housing, whether it's regardless?
We need either an implicit or an explicit government backing, and that's why we'd rather have the taxpayers have an explicit and compensated.
I used your and Toomey's over, so thank you.
I noticed. Thank you. Senator Rounds.
Thank you, Mr. Chairman, and I want to thank you and our panelists for their hard work on these proposals. housing finance reform is a difficult issue to tackle, and I appreciate their dedication to ending the decade-long GSE conservatorship. There's something else as well I'd like to just add at this time. There are challenges within housing within the United States in rural areas, as my colleague on the other side of the aisle has just indicated. I'm just going to give an example, and I know Secretary Carson, we had a discussion on this the other day. Indian reservations, Native Americans have a real challenge because we have Indian trust lands, and trying to find a way to move forward so that they can also purchase houses is something that is of real importance in South Dakota. Just as an example, the VA, they do VA loans for Native Americans who are veterans who now live back on a reservation. Minneapolis office about a year ago received recognition because they had the highest number of those mortgages that had been issued in the previous year, 5 in the entire region. Simply not acceptable. Yeah. There's got to be a way forward. And so as we look at this, I don't think this is a Republican issue or a Democrat issue. I think this is a case of where we have to find a way forward to fix the challenges. I'd like to say to all of my colleagues on both sides of the aisle that I believe that the door should be open when it comes to working out a pathway forward to ending conservatorship of the GSEs. Chairman Crapo was able to come to a consensus with then Chairman Tim Johnson, who was my predecessor, about how to unwind conservatorship in a bill that passed out of committee on a bipartisan vote. There's no reason that we shouldn't be able to navigate those same concerns today. Today's hearing should also serve as a warning. As we've all read, the Trump administration is determined to bring the GSE conservatorship to an end, and it has clearly defined ways that it can do so. While my colleagues might object to certain parts of the administration's plan, these objections are no justification for not attempting to at least find a path forward within this committee. There's common ground that could be had, and it is very unfortunate if we are not able to hold a markup on this approach. It's been 500 days since this committee has held a markup. If your concerns are genuine in this committee, if our committee members are serious about doing something, I think this is the time in which we can perhaps find some common ground. My first question I'd like to direct to Secretary Carson. Mr. Secretary, I note with great interest HUD's proposal to transform the Federal Housing Administration into an independently chartered government corporation. Now, I agree with HUD that this would provide FHA with the autonomy it needs to better execute its mission, especially serving first-time and low-income home buyers, while still allowing for HUD to have oversight and regulatory authority. I would like to point out to my colleagues on the other side of the aisle that this is not an idea that comes from the radical right. President Obama's FHA Commissioner, Carol Galani, has proposed the same reform. Nonetheless, Mr. Secretary, I have drafted legislation that would do just as you proposed, but some of my colleagues have expressed reservations that reforming the FHA into a government-chartered corporation would impact HUD's funding for other programs. My view is that the receipts from FHA mortgage insurance would still be available to offset the costs of other HUD spending. I've offered to give my colleagues on the other side of the aisle an opportunity to rewrite or to have input into this section of the bill, but so far I have not received any takers. My question is, could you briefly discuss how to achieve a more independent FHA without jeopardizing HUD's funding?
Well, thank you for that question. And I did very much enjoy time I spent in your state. Interestingly enough, we have not said anything about the receipts all being swept into any particular area. So that obviously is not going to be a particular problem. The reason that we want to separate it out into an individual corporation, very much like Jenny May, is so that they can have the flexibility of doing their own procurement, their own hiring, staffing, being able to respond quickly and with agility to market conditions that occur. They would still report to the HUD secretary, and we would still be able to align our missions. So consider the fact that right now the FHA commissioner has to deal with a lot of housing assistance needs also. Those really require their own separate entity so that we can really concentrate on public housing, you know, on multifamily in a way that it should be concentrated on.
Thank you, Mr. Chairman. My time has expired. I would ask for the opportunity to ask several questions for the record that we'll ask you all to respond to. Thank you, Mr. Chairman.
Senator Warner.
Thank you, Mr. Chairman, and good to see the witnesses. I've spent a lot of time on this subject over the last many, many years, and where I want to focus today, Secretary Mnuchin, is particularly less on what you aspire for legislatively, but what potentially might happen administratively. And I have to say at the outset, I'm a little concerned that it appears to me from your administrative proposals, we could end up with a system that actually doesn't end too big to fail and doesn't increase affordable access to credit, and that is a grave concern to me. First of all, I want to associate myself with Senator Menendez, who I think rightfully pointed out that in multifamily, not a problem, wasn't part of the crisis, but in the administrative component of your proposal, you're trying to lower the GSE multifamily caps. To me, that means smaller support for multifamily. I am concerned about that. It also, in your administrative proposal, so again, let's not talk about legislatively, we continue to see this theme around trying to lower the GSE footprint. If we have a lower GSE footprint, if we have higher capital requirements, just the logic of that would mean you would have a much smaller revenue base, and under that assumption, wouldn't that mean the GSEs would deliver less cross-subsidy in the system?
First, I just want to acknowledge the work that you've personally done on legislation, and I truly hope that you will work with us because I know you spent a lot of time on this, and
I know more about this subject than I ever wanted to know.
Exactly. We hope not to lose all that knowledge. So, again, I just want to, when we comment on multifamilies, the GSEs have gone from 25 to 40% of market share, which I think is fine. We're not looking to take it back down to 25%. We just don't want to see it to go from 25% to 75%.
But administratively, I thought you said that you wanted to lower the GSE multifamily caps.
Again, we want to...
Which I would read as slowing down. Go to my other question, though, which is, if you're making the footprint smaller, if you're raising capital, which appropriate, isn't that going to mean de facto a decrease in the cross-subsidies that take place in the system?
No, not necessarily.
How do we do that?
Again, I think that cross-subsidy is something that we have. As we've talked about it, some of it is efficient, some of it is inefficient. Again, our priority...
I'd like to see some more detail on that. I think I don't respectfully see how you make that happen. Dr. Calabria, let me ask you this. If you end up on your administrative and in the net worth sweeps, will you continue to fund the Housing Trust Fund? Just give me a yes or no.
As long as the conditions in the statute that require it, yes.
So you're going to sweep all the profits, you're going to try to build up capital, but you are committing here to continue to fund the Housing Trust Fund.
As long as the conditions in statute are met for funding it, then yes, absolutely.
Well, there's a great deal of discussion about
what the statute says. Well, agreed, but I'm bound by what the statute says.
Now, my sense is, and Secretary Mnuchin, that I know you talk about potentially for additional entrants coming into the market, but my concern is on your administrative proposal that what you're really talking about on Fannie and Freddie is recap and release, which is going to keep us with a duopoly, even with higher capital standards, which is going to put us right back to where we were prior to 2008. I don't know how that gets rid of our too big to fail issue. So one of the things you both addressed when Senator Crapo raised about as currently constituted, these entities are too big to fail. If you go forward, and this is both for Dr. Calabria and Secretary Mnuchin, if you go ahead and go through on your recap and release plan, would you both recommend that the GSEs be designated as SIFIs by FSOC?
Thank you. I think that's an important question. So first, let me just say we do not believe in a simple recap and release. I want to make that very clear. Second,
that's not the way I've read your proposal.
Okay, well, that's why I just said I want to make that very clear. The second thing I would say is we absolutely would expect either in the administrative way or working with Congress, that we would go to FSOC, and before we raised public capital, we would make sure we understood that there was enough capital so that they did not need to be designated.
Dr. Calabria,
I would agree with the Secretary's statement there.
so neither one of you think, under your recap and release scheme, that the GSEs will be SIFI designated?
Senator, as a member of FSOC, while I believe that there is more than sufficient information to begin a process, I also think it's important as a member of FSOC to never start with the presumption that any entity is necessary systemic until you've actually run the process.
Only thing I would just point out, Mr. Chairman, is that when you and the ranking member had, I thought, a very helpful hearing on this, I believe every witness across the ideological spectrum thought that the GSEs should have received that FSOC SIFI designation. And again, this concerns me gravely that we could somehow end up with a scheme where we end up with a duopoly. Somehow they're not even going to get SIFI designation, and I believe we're right back in the middle of a too big to fail. Thank you, gentlemen.
Thank you, Senator Warner. Senator Kennedy.
Thank you, Mr. Chairman. Mr. Director, as an American, do you believe that I have a right to own a home even if I can't afford it?
I think you have a right to own property, yes, own a home. Now, whether you can afford it opens up to whether you can actually buy that home. I mean, it's the same in terms of you have the right to drive a Mercedes. Whether you can afford it or not is a separate question.
Right.
So I'm not sure where you're going with the question, Senator. It'd be helpful for me to parse that out.
I want to understand your philosophy. Do you think that as an American, if I can't afford a home, I have a fundamental right to have other Americans subsidize me?
Thank you for the clarification. The short answer would be no.
Okay. But yet, I think everybody on this committee, I think everybody on this panel believes we ought to do everything possible to make homes and mortgages affordable.
Absolutely.
Okay? We can agree on that, right?
Absolutely, 100%.
Why would a lender make a loan without verifying income?
Agreed.
Why would they?
I think the only reason that a lender would reduce due diligence like verifying income is because they can pass that risk along to someone else, like the taxpayer.
Yeah, because they can sell it to you guys.
Absolutely.
I mean, isn't that the fundamental problem here? How we got in trouble was underwriting standards?
Absolutely. We are the ones holding the bag at the end of the day after everybody else in the process has made money and walked away. It is the taxpayer holding the bag.
Well, what have you done to fix that?
Well, Senator, we've begun, I guess tomorrow we're mark 5 months in the job. We've already started doing a bunch of due diligence internally, try to make sure that we have the regulatory scheme.
That wasn't a fair question. What did your predecessor do to fix that over 11 years?
Senator, I think that, to me, I'm looking at what needs to be done going forward. Obviously, I would have preferred to inherit a different situation than I did, but...
Well, excuse me for interrupting, but, you know, we're limited on time, Mr. Director. Have underwriting standards gotten any more realistic?
They've gotten worse, not better. Certainly at the GSEs, we saw a massive expansion in the last 2 years at least, where a whole lot of high-income, high DTI loans were done that weren't previously being done. So underwriting standards have eroded.
Yeah, that's what I thought.
And it concerns me greatly.
Well, this is just one point of view. This whole thing is a car wreck. It's a dumpster fire. We spent $190 billion of taxpayer money, and we're in worse shape.
Agreed.
Now, here's what I think we ought to do. I'm not in love with every aspect of your plan, but I'd encourage you to get somebody to put it in the form of a bill if you haven't already, get it introduced, and let's mark it up in this committee, Mr. Chairman and Mr. Ranking Member. Let's put it in front of the committee, and let senators be senators, and let's try to put out the dumpster fire. What do we have to lose? I mean, how long have we been talking about that? Doing nothing is hard. You know why? You never know when you're finished.
Senator, I couldn't agree more.
Now, if that doesn't work, and I'm not going to mislead you, it's going to kind of be like trying to slam a revolving door, pass a bill through the Senate. I would encourage you, Mr. Director, to saddle up and go. Tell me what you can do with your administrative authority to put out this dumpster fire.
Well, the first thing we hope
And by that I mean encouraging people to make loans to people who clearly can't afford to pay them back.
Senator, we will be de-risking the GSEs, particularly in the.
What does that mean?
That means that on one hand, if you're leveraged 1,000 to 1, you can't make loans that are almost guaranteed to go bad. So we have to be able to improve the quality of the lending at the GSEs in a way that is sustainable, that doesn't end up. I 100% agree. If we do nothing, this is going to end very badly.
Well, of course it is. We're going to have a recession at some point.
Absolutely.
What was the leverage ratio, Mr. Chairman? 19 cents for every $100?
That's what I understand.
1,000 to 1 at Fannie Mae.
Now, let me say it again. I got 1 second left. Let's put this bill in front of this committee, Mr. Chairman and Mr. Ranking Member, and let's see what we can do. I listened to Sherrod's comments. He made some good points. I don't agree with all of them, but I think we ought to flesh it out. But if we're not, let's just admit that Congress is just going to sit on its ice cold lazy butt, do nothing, and you need to get started trying to fix this car wreck, Mr. Director. Thank you, Mr. Chairman.
Senator Jones.
Thank you, Mr. Chairman. Thank you to the witness. I want to follow up my friend Senator Kennedy. I absolutely agree with that. Completely agree. We need to get this in front of this committee. We need to get it, and we need to hash it out. But with all due respect to the senator, I think we need to go farther than just this housing issue in this committee. We need to get things to the floor of the United States Senate. We need to talk about gun violence. We need to talk about health care. We need to talk about election security. There's a lot of things that this Congress of the United States and the Senate of the United States need to act as the independent body that the Constitution set up, and not just somebody that's there only if the President of the United States is going to sign a bill. So thank you, Senator, and I apologize if I took it a little farther than what you anticipated, but I completely agree with you. Second thing, a quick comment, Secretary Mnuchin, and I will follow this up for the record. I believe that you earlier testified that, and I could be wrong, but I thought I heard you testify that the duty to serve the very low, and moderate income families in this country was maintained in this report. I don't read this that way. I see on page 23 and 24 of the report where you're talking about reforming that, taking rid of that mandate, and replacing it with something that would involve assessments and congressional appropriations, which I think is a really slippery slope to try to do. As much as I like Senator Leahy and Senator Shelby's approach to appropriations, that may not always be the case and subject to the whim of a Congress or the administration. So I'll follow up with a question for the record. The one area I do want to talk to about with Dr. Carson, Mr. Secretary, while I appreciate the administration's efforts to move forward on housing reform, I do believe that overall these reforms are going to make it harder for working class families to achieve home ownership and potentially put the dream of home ownership out of reach. My view, open to discussions on that. But more importantly, while these reforms are being discussed today, I think we also have to talk about some other so-called reforms that the administration is making to housing in America. We haven't seen you here for a few months, a year and a half, as a matter of fact. I don't know if we'll get to see you again in any time in the future, so I want to ask you about a recent HUD proposal regarding rules that I believe are going to dramatically undermine the ability to enforce the Fair Housing Act. I have talked time and time again in this committee and others that housing discrimination in 2019 is persistent, but more often than not subtle, not always direct. And years of legal doctrine, including the Supreme Court, made it clear that if policies and practices of businesses unintentionally discriminate against racial minorities or protected classes, it's illegal. It's called disparate impact. And the new rules, I think, make it nearly impossible to bring forward a discrimination case based on disparate impact. Fair housing is only as fair as it can be enforced, and if we can't bring disparate impact housing by very nature, it ain't fair. and I am concerned about this. Every single major housing rights and civil rights advocate agreed that this rule is a major blow. Across the board, this rule introduces new hurdles for plaintiffs, including a new 5-part test. Mr. Secretary, I think we can all agree that housing discrimination still exists in this country. Black home ownership rates are down to just 40%. That is not just because of discrimination. I get that. We're still pulling out of a recession. But the fact is they're down to 40%, and black home ownership is actually lower now than it was in 1968 when the Fair Housing Act was passed. I would also like to point out that you have the ability to bring secretary-initiated complaints. President Obama did it an average of 10 times a year. President Bush did it an average of 5 times a year. But in the 2.5 years of the Trump administration, we have 0 that you have initiated. So a cynic would say that this new rule is in part to justify the inaction of HUD in bringing these complaints when we know that they exist. So my question to you, sir, my question is simply, explain this to me. Explain why we need this rule. What is important? Why do we need this when we know it exists? Give me an opportunity, give us an opportunity to explain why you are going to make it nearly impossible for people to bring disparate impact statements.
Let me just mention the fact that our record stands for itself. The fact of the matter is, you know, we've initiated the Facebook complaint. We've gotten an agreement out of Los Angeles after almost 10 years of not taking care of disabled people's housing needs. We've launched one against San Francisco for discriminating against low-income people for housing. And if you look at our list of suits that have been brought, I think they would compare favorably with anyone else. As far as disparate impact is concerned, we are trying to bring it into alignment with the Supreme Court ruling.
Oh, come on, Mr. Secretary. I'm a lawyer. That dog's just not going to hunt. It's just not. This is not in the Supreme Court barely rolled back this. What you're doing is making. I've been practicing law for 40 years. What you're doing is making it just damn near impossible for a plaintiff to bring a disparate impact statement. It is not in line with the Supreme Court. The Supreme Court's affirmed this time and time again.
In fact, we've brought a complaint against San Francisco on disparate impact. You should go back and read it.
I'll take a look. I'm happy to do that.
But the fact of the matter is, if Congress, for instance, were to raise the rate, minimum wage rate to $15, who would be disproportionately affected? Low-skilled or unskilled workers, primarily minorities in that area. That becomes a disparate impact against Congress. You begin to see what I'm talking about here.
No,
you can
I'm
have
sorry.
disparate impact in almost anything. So what we want to do is clarify the way that it's done. That would save taxpayers a lot of money.
My time is up, sir, and I may follow up with a record. Let me just say this. It's been offered out for public comment, and I want to make sure that my public comment is recorded right now. If I need to do it in writing with a black Sharpie, I'm happy to do that. But this is wrong. This is absolutely wrong, Mr. Secretary. This discrimination still exists in this country. We need to be affirmatively doing something about it and not making it more difficult.
I'd love to discuss it with you.
Thank you. Anytime. My door's wide open.
Senator Moran. Chairman, thank you. Both HUD and Treasury proposals suggest that there be a distinct separation between the borrowers that use FHA financing and those that use GSE financing. How would this be achieved, and how would this separation help home buyers? Dr. Calabria?
Thank you for the question, Senator. I think the objective here, which Dr. Carson talks about in his testimony, is to try to reduce that competition at the margin, which has historically driven down credit standards. We certainly saw before the crisis where the GSEs aggressively tried to grab FHA market share and did so by reducing their standards. And of course, many of those loans, unfortunately, turned out unsustainable and left homeowners in a position where they lost their homes. So again, trying to encourage responsible, sustainable homeownership is the objective. To echo what Dr. Carson again has said, traditionally FHA has focused on the first-time home buyer, low down payment part of the market. And I think, first of all, I'm going to emphasize the objective here is not to have any gaps in the market, but the objective is to reduce some of that competition which has eroded standards in the past.
So it seems to me that our goal is to have a multiple guarantor system, and that is to boost the accountability to taxpayers. I assume that you all could tell me there are things that go on at the GSEs that deserve our attention in regard to accountability to taxpayers. We want financial innovation. We want greater consumer choice through competition. Is there, when we separate the GSE and the FHA, does that help achieve those goals?
Who's that for?
Whoever has the answer that is one I can understand. And succinct.
Well, I can speak for the FHA and what our goals are and what our principal focus is in this reorganization is so that we can concentrate on those first-time home buyers, on minorities, on people who frequently don't have access to traditional credit markets. And this plan actually facilitates that rather than takes away from it.
One of the things, it seems to me, that GSEs have been able to accumulate in this time frame that we're in is greater access to technology and information. So if we have a new system, how do we force the sharing of the benefits in data and technology that those already established in the business have?
Well, I can tell you that the GSEs were able to significantly upgrade their IT performance while they were in conservatorship, thanks to the taxpayer. Therefore, what they have achieved in that area, they should be willing to share. And I think they recognize that, and I think Congress should recognize that.
So you would see an increased transparency in sharing that GSE data and other information with the industry. Could that be a precondition to release from the conservatorship?
I think that's really the question for the FHFA, but I would agree with what you're alluding to, that these are one of the issues that we should be looking at.
Tell me where we are in regard to capitalization and where we need to be. What level of capitalization do you see as necessary? Maybe this is for you, Mr. Secretary. At the GSEs to operate efficiently and, most importantly, to withstand any future significant financial downturn?
I think they need a lot of capital. And let me just say, you know, what we're looking at now, $3 billion in each, is irresponsible in terms of the amount of capital that they have, and there's no way they could operate if it weren't for the fact that they could draw on the Treasury lines, which in essence act as a capital backstop today. So we really see two things. One, retaining earnings. That's one way we'll accumulate capital. And then two, we will have to raise third-party capital. But, you know, again, if I were to give you a range of a number, it's more like $100 billion than it is $6 billion.
What's the capitalization today compared to where we were before the crisis of 2007-8?
It's minuscule today.
So we're in worse shape going into any kind of significant major economic downturn than we were when we had the catastrophic consequences.
The GSEs could not operate today if it were not for the Treasury lines.
Thank you.
Senator Smith.
Thank you, Mr. Chair and Ranking Member Brown, and thank you all very much for being here today. You know, my office has been doing a whole series of meetings around housing all across Minnesota, small towns and rural areas, and big cities too, and I want to just do a note to Senator Rounds and Senator Tester for bringing up this issue and how it affects rural areas and especially tribal areas. And you know what I've heard in these meetings is that if you don't have a safe, affordable place to live, then nothing else in your life works. Your job doesn't work. Your schooling doesn't work. Your health doesn't work. Your companies don't work because your employees don't have a place to live. So that's the way that I am looking at these really complex questions about what we do about the GSEs. And so I want to start with this. Dr. Calabria, you and I had a chance to talk some about this in July when you came to visit my office. And in July, you indicated that you thought that the Treasury report might be flexible enough to accommodate the GSEs operating like a utility with a regulated rate of return. And you even thought that maybe that you would be opening to considering that kind of a utility model rather than a multi-guarantor model in order to make sure that we've got the equity in all the places and for all the families that we need equity for. So my question is, after reviewing the Treasury plan, do you think that a utility model would work?
Senator, let me first say, I think under certain circumstances, a utility model could work. I think it would be helpful for members who want to see a utility model to start fleshing that out. What I take away when people suggest utility is they mean regulated rate of return and therefore regulated pricing. As you know, currently in conservatorship, we do regulate the pricing of the GSEs, and I certainly would welcome having such regulatory flexibility outside of conservatorship.
Well, as Senator Brown said, as we've been working on this and looking at this idea of a utility-type model has emerged as something that there seems to be a lot of consensus around. Agreed. And so I'd like to consider, I think it's important that we continue that conversation because what we're seeking here is a way of making sure that we get at the equity that we need in order to fulfill that dream that people in this country can own a house.
Absolutely.
Yeah. Yes, Secretary.
I just want to comment that as well, and we've actually had very specific conversations with the chairman about this and with the director and myself. We support working with this committee on what you may consider to be a utility model. And again, I would just say there are plenty of utilities where the pricing of the utility is regulated. And we do think that FHFA should maintain regulation and oversight of the pricing of the guarantee. So we look forward to working with this committee on meeting objectives that go down that line.
Well, let's consider, I'd be interested in continuing that conversation and I think that's good. Now, Secretary Mnuchin, I just have to take this opportunity since I have a chance to see you. I don't think that you and I have had a chance to meet before. You know, I just got back from Minnesota, spent August in Minnesota, and as you probably know, in Minnesota, agriculture is really the bedrock of our economy. And as agriculture goes, so goes small towns and rural areas. And I talked to a lot of farm families at the State Fair and in Halleck and East Grand Forks and all over the place. And, you know, Minnesotans, we don't like conflict. We're not quite like my colleague from Louisiana. We're pretty low key, but Minnesota farmers are telling me that they are devastated. That is their word. They are devastated by the president's tariffs, his tariffs on China. Gary Werdich, who's head of the Minnesota Farm Bureau, says it has already driven some farmers off the farm, which not only hurts the farming community, but it hurts rural, small-town communities. It's been devastating to rural America. So, Mr. Secretary, yesterday on Fox News, you talked about the Chinese tariff war, and you said, quote, "We have not yet seen any impact on the U.S. economy." And I just don't see how you can say that. You know, in 2017, China imported a little over $19 billion in U.S. ag products, and that was in 17. In 18, $9.2 billion, a 50% drop. And Minnesota farm families are like, they don't want to be told to be patient. They're afraid they're going to lose their farm. So my question is, do you really believe that this tariff war, the president's tariff war, hasn't had an effect on our economy?
First, let me say I look forward to spending time with you, so I'll have my office reach out.
Thank you.
My comment was on a broad impact on a $22 trillion economy. I also went on to say that there clearly are specific situations, some of which where we've given waivers. And I want to acknowledge on the farm area, we've spent a lot of time, even on trying to get an interim agreement to have China buy agriculture. So I very much appreciate what's going on. I never thought I'd become an expert on soybeans and other agricultural products. I've been accused at times of just wanting to sell soybeans. That's not what we're trying to do. But we want to make sure that China treats our farmers fairly and doesn't retaliate against the farmers in an unfair way in the way we've been doing. And I can tell you that's top of the agenda for the conversations we're having this month.
Well, I think Minnesota farmers, the soybean farmers in northwestern Minnesota have seen their sales drop by 75%. They don't have any place to store the beans anymore. They feel like they are collateral damage in this trade war, and I think it's urgent that we...
I understand that, and I can also tell you there were specific commitments made in the Oval Office from the Chinese that they did not follow through on, and that has been grave concern on us for U.S. farmers.
Thank you.
Senator McSally.
Thank you, Mr. Chairman. Thank you, gentlemen, for your testimony. I'm from Arizona. In the last housing crisis, I was serving in the military, and I'll just share with you that so many of my neighbors lost their homes in a middle-class neighborhood of hardworking families. And this crisis hit Arizona really hard. The home costs, the home prices dropped about 56% in the 5 years after 2006. In the 5 years before that, home prices had nearly doubled. What you're describing today sounds even more dangerous than the conditions that we had prior to the last crisis. I haven't been here that long, thank God, but sorry, I shouldn't have said that, but honored to serve Arizona. The point is, as I'm in this new role looking at this, people are expecting the government to work for them. They're expecting that we had the last crisis, we had so many people lose their homes, that modifications and changes would be made in order to make sure that we prevent this from happening again. But what you're describing today, if we do nothing, if none of the changes you're offering
homeowners today than we had. But we want to make sure that we do learn from those things, and we have made substantial progress.
Great, thanks. I want to also share that in my, I took a tour to all 15 counties of Arizona in my first 90 days, and affordable housing, I want to associate myself with my colleagues as well. Affordable housing for the workforce, whether that's rental or buying, is something that is a real challenge for many communities in Arizona, to include rural communities. And I know this is not all just a federal issue, but this is something that is really impacting the people that I represent. So I think breaking down as many barriers as we can to provide better access is something that's really critical for Arizonans. So thank you.
Senator Reed.
Well, thank you. Director Calabria, thank you for being here today along with your colleagues. We've all talked about affordable housing. In fact, this is the most, I think, unanimous sort of sense of the criticality of affordable housing I've heard in this committee. There are two programs that directly aid affordable housing. That's the Capital Magnet Fund and the Housing Trust Fund. They are funded through assessments on the agencies, not through the appropriations process. Will you commit to ensure that these are fully funded and will continue forward to support affordable housing?
Within the constraints of the statute, absolutely, yes.
Thank you very much. Now, I'd like to direct a question to all the panelists, three questions, and I'll start first with the Secretary of the Treasury. Secretary Mnuchin, you've done an analysis of the impact of this program, I presume. So can I just ask you, in a categorical sense or a general sense, who will not be able to get a mortgage under your proposal?
I don't think there's anybody who won't get a mortgage, other than there may be certain people today who shouldn't get mortgages because they really can't afford them. But affordable mortgages are what we want.
So you've not identified any group or group of individuals that would be disadvantaged by the proposal?
The only thing is the director has said he's looking at the GSEs, which is really his responsibility. Of there may be certain high-risk loans, the GSEs that are making that they shouldn't, but that's his responsibility.
I'll ask him. Thank you, Mr. Secretary. Secretary Carson, from your analysis, do you see any groups that would be left out?
Yeah, well, certainly there are some people who probably should not be mortgage holders. And in many cases, very disabled people, elderly people, people who are drug addicted, who are not going to be able to make the payments. We have other programs for individuals like that.
And Dr. Calabria, your analysis.
Well, Senator, I'll note it's the administration's plan, and being an independent regulator, we haven't done an analysis of the administration's plan.
Okay. Again, going back to kind of the analysis underlying the proposal, will it cost more to get mortgages on your analysis? Have you done some data runs to show that rates will remain relatively constant?
We don't think it will cost more. And again, on the first question, what I was saying is there may be people who have giant cash-out mortgages today that are creating big risk to the GSEs that there shouldn't be. That's what I was implying when if there are people who won't get mortgages.
But it's a supposition. It's not an analytical analysis. You don't have analysis.
We would do an analytical analysis as part of this, but no, we haven't done that part yet today.
Dr. Carson, any comments on cost?
We don't have any analysis that dictate or that suggests that the prices will be raised. We are doing things to try to lower the prices, working with the servicers and making sure that they do the appropriate things, particularly before foreclosures.
And Senator, if I could offer some commentary. I think it's important to keep in mind the plan suggests, and I have called for as well, increased competition. Again, it's been a few years since I was in grad school, but the economics I learned is that competitive markets provide lower cost and more access than monopolies and duopolies. So it's just hard for me to believe that bringing competition into this market will result in anything but lower prices. And again, I think there's a strong amount of evidence of that. Again, we look at other sectors across the economy. Again, there's pretty good evidence for that.
Well, again, I conceptually, you make a point. If you get that evidence in an analytical fashion, we'd love to have it. I certainly would. Thank you. And then another question. How about community banks and credit unions? Will they fare better or worse under this arrangement, in your view or your analysis?
We would absolutely make sure that they did not fare worse. We want them to be treated fairly, and that's a very important part of any future plan.
Dr. Carson?
They're absolutely key. We've been working with them, and their ability particularly to provide education to people about housing financial management is essential.
And Dr. Calabria.
Senator, it was mentioned earlier the control over pricing, such as the utility model. One of the things we've done in conservatorship is eliminate the volume discounts that Fannie and Freddie gave to large lenders. As you know, pre-crisis, Countrywide paid a lower price than community banks. Fannie and Freddie pre-crisis drove consolidation in the origination side. I think it's important post-conservatorship for me to have the authority to limit Fannie and Freddie's ability to drive consolidation.
Okay. If I can just for a moment, there's been a lot of discussion of the lack of capitalization of Fannie and Freddie and the fact they just rely upon the Treasury to survive. It's interesting, though, because since, and I was here, and Senator Crape was here, since this crisis began, I think we've invested $191 billion in Fannie and Freddie, and the Treasury has received about $400 million, I believe, excuse me, $300 billion in terms of dividends you've taken out. So couldn't you correct this capital discrepancy by just relenting on some of the dividends you're taking out?
The taxpayers should be and have been compensated for the risk that they've had historically and the risk they have going forward. So had the taxpayers put the money in the stock market, they would have earned multiples of this. So the answer is this isn't just about if we took away tomorrow, if we said we got our money back, we'll just rip up our guarantees, these entities couldn't exist. So as long as taxpayers are at risk, we expect the taxpayers to be compensated.
But just a final point, isn't your model going forward to allow these individuals, these entities, to keep their capital, basically keep their dividends?
Two different things. So from a cash flow and a capital standpoint, yes, our intent is they will keep the cash and will increase their capitalization. What we are negotiating with the director right now is in return for that, we do expect that the taxpayers are compensated. One way may be to increase our liquidated preference, maybe commitment fees, but that's what we're discussing now.
Thank you, Mr. Treasurer.
Senator Cortez Masto.
Thank you. First of all, let me just thank Chairman and Ranking Member. Affordable housing in this discussion is key. It is something we have been talking about, but it is a major issue that we need to address in this country. In Nevada, it is, outside of the cost of health care, the #1 issue. So I appreciate, gentlemen, you being here. But let me just kind of also kind of introduce you to Nevada, and because some of the discussion is not pertinent to what I'm hearing in the impact in Nevada when it comes to affordable housing. I've had roundtable discussions on this issue for the last 2 years in Nevada in our urban and rural areas. If you don't know anything about Nevada, know of the 17 counties, 15 are rural. And I can tell you right now, rent control is not causing the affordable housing crisis in Nevada. In fact, Nevada does not have any type of laws that mandate type of rent control. And it's my understanding there's actually only 5 states that have rent control. I'd also like to point out that, yes, streamlining state and local permitting and improving local zoning will help, but it will not solve the problem. And it is not the main impact to the affordable housing issue in our state. I can promise you this, around those affordable housing roundtables that I've had, local and state government have been at the table with our private sector, as well as so many other people and some of the folks that work for you as well. So please know that. I am looking for answers, and I think we can come together to address this issue if we work together. But let me start, Secretary Carson, with you. I'm curious, does HUD support the continuation of the Housing Trust Fund?
The purpose of the Housing Trust Fund, we certainly support that.
You do support it. So you would support keeping the Housing Trust Fund intact the way it is now?
I don't know if I wouldn't be happy with some changes to it, but...
What type of changes would you make?
Well, you know, we really want to take a more comprehensive look when it comes to how do we get people into affordable housing situations. That includes everybody in our society. And I'd like, you know, to be able to provide a little more flexibility, not only for the agency, but for localities.
I'm not sure what that means, but let me ask you this. Right now, the changes you're making, how will it affect the $3 million or more that all states receive every year to address acute housing needs for extremely low-income families?
Well, we may have better solutions for extremely low housing, low-income people.
Do you have those yet? Or is that something you're looking to work with Congress on those solutions?
Of course we want to work with Congress on those solutions, but I just want to make it clear that traditionally just throwing money at the problem has not solved it. This has been going on for several decades, and we want to look at some of the more deeper issues that cause their problems and address those.
Okay, I absolutely agree that this needs to be addressed, but we've got to have substance. We have to have details. And that's what we're looking for. Yes, Secretary Mnuchin.
What I was going to comment on is, one thing that's clear today is there is bipartisan support on the issue of affordable housing. There may be differences in views in how we can get there. I just want to be clear in the report, it may be there should be more money put for affordable housing. So when we talk about the housing trust funds, I'd say if there were a more efficient and accountable mechanism and Congress wanted to put more money for affordable housing, that's something the administration would be very much open to working with this committee on. So
right, and I agree there's bipartisan support.
The report does not imply less money for affordable housing. That's what I wanted to make clear.
Thank you. What's your definition of affordable housing? How do you define it?
It depends on the market. What's affordable in one market is not affordable in a different market. And I think there's both affordable housing, both to own as well as to rent.
Right, but if you are setting parameters about how the funding is going to go towards affordable housing, how do you know where to send it if you don't define it first?
Well, we'd have to work with this committee. So, I mean.
So you haven't defined it yet?
Well, they're traditional.
What's the traditional?
Traditional is you should spend less than 30% of your household income on housing. And if you spend more than 50%, then that's severely distressed.
Okay. And so that is a parameter that you're looking at when you're deciding how you're going to focus on the needs of those that fall within the affordable housing definition that you've just defined. Is that correct?
I think that's generally acceptable.
Are there any other identifiers for affordable housing? And I'll open that up for all the panel. Director.
Well, you certainly have a number of different formulas. I mean, the CDBG has a different formula. Personally, I would probably allocate it across states based on poverty. Obviously, on one extreme, the low-income housing tax credit is done on a per capita basis. That, to me, is probably not well-targeted. So, again, we have a number of formulas across states. This is certainly the committee has dealt with on multiple occasions.
Okay. Let me change. I've just got a few minutes. Manufactured housing is very important to Nevada, and particularly our rural communities. So, Secretary Carson, let me ask you this. HUD includes manufactured housing in your proposal without any specifics. What protections for manufactured housing home buyers will you ensure remain in any change policy?
Well, thank you for bringing that up, because manufactured housing has changed dramatically, and almost 10% of single families are in the manufactured housing. People think about trailers and double wides. We're talking about tremendous technological progress that has been made in that area. And what remains really is removal of a lot of the regulations. I know you don't think that regulations are everything, but they have severely impeded the ability to utilize this very excellent solution. And that's
regulations at the federal level, regulations at the state and local?
State and local levels. Absolutely.
So if the state and local level, they're willing to address those issues, in which they're working on in my state, to what extent are you looking at having an impact on manufactured housing as it comes to federal role?
Well, you know, HUD obviously is the regulator of the rules regarding manufactured housing. And we have now taken manufactured housing and made it a separate entity with a DAS designation. So we have paid a lot of attention to this. This is an area where I think we can solve a lot of the problem.
Well, let me ask you this. Can you agree to preserve the protections for manufactured housing as we move through this process of looking at various changes?
we will preserve them and expand on them as necessary.
Thank you. I notice my time is up. Thank you.
Senator Van Hollen.
Thank you, Mr. Chairman. Thank all of you for being here. Secretary Carson, I want to follow up on some of the questions Senator Jones asked with respect to the proposed rule that HUD put forward in August that would gut the ability of people who are victims of housing discrimination to prove that discrimination using a disparate impact analysis. In your response to Senator Jones, you said that the purpose of this rule was, quote, to bring the rule in alignment with the Supreme Court decision, unquote. Is that your testimony?
That's correct.
So I'm confused, Mr. Secretary, because I have in my hand here an April 2017 filing where you're the defendant in the case. HUD's being sued in the U.S. District Court for the Northern District of Illinois, Eastern Division, and the plaintiff is alleging that the existing Rule 213 is not in compliance with the Supreme Court decision. And in this pleading, you took the opposite position. I quote from your own brief here, stating, quote, the Supreme Court's holding in inclusive communities is entirely consistent with the rule's reaffirmation of HUD's longstanding interpretation that the FHA authorizes disparate impact claims, unquote. So which is it, Mr. Secretary? I mean, you've taken the position in a court filing that Rule 2013, as is consistent with the Supreme Court case, and your testimony today is just the opposite.
No, it is not. We uphold the principles of disparate impact, and in fact, as I testified earlier today, we've used that in a recent complaint against
Mr. Secretary, let me just ask you this. Is your testimony today remain, though, that Rule 213 is consistent with the Supreme Court's holding in inclusive communities, which is the position that you took in this filing in April 2017? Is your position today on that question the same as it was in 2017?
My position...
Yes or no? I mean, this is a pretty simple question.
My position, I don't do yes or no. But my position is that we want to be consistent with the ideal of the Supreme Court, which is not to have this be so overly burdened that we drag discrimination into virtually every case.
But, Mr. Secretary, you took the position in this filing that the existing rule complied with the Supreme Court decision in inclusive communities. Now, as I understand what you're saying, is you're just using that decision as a pretext to rewrite the rule to make it much harder to file a discrimination claim. Is that what you're saying today?
No, what I'm saying is
Well, then why are you rewriting the rule that you said was consistent with with the Supreme Court decision? If your purpose was, as you testified earlier today, to bring the rule in alignment with the Supreme Court decision.
What I'd like to do is actually talk about solutions to problems.
Mr. Secretary, really, you say you don't answer yes or no questions, but this is a pretty simple question. You took a position, you as Secretary, took a position in this court filing in 2017 that said the existing rule, Rule 213, is compliant, is consistent with the Supreme Court decision in inclusive communities.
Yes.
So I was surprised earlier today to hear you say that the reason for your new proposed rule, which you just filed in 2013, was because you wanted to bring it in compliance with the Supreme Court decision, which you earlier stated it was already, the previous rule is compliant with. So my question is, which is it?
There are aspects of the rule that can be reinterpreted in many different ways, and it depends on which circumstance you're talking about. You know that.
Well, Mr. Secretary, you're clearly in this latest proposed rule going way beyond what the Supreme Court required in terms of proving discrimination. In fact, you took the opposite position in 2017. And so it does
We're not
appear,
going...
Oh, so if I can show you a proposed rule change that is consistent with the Supreme Court decision, but does not make it as difficult to file a discrimination case. Would you accept that change as part of your new rule?
What I would say is let's talk about what makes sense and what's logical and what helps us to solve the problem.
Yeah, well, what we're trying to do is allow people to prove discrimination where it exists.
And we're happy to do
The Supreme
that.
Court has upheld the disparate analysis impact because they understand that discrimination can be subtle. People don't jump up and say, hey, I'm denying you this loan because of your race.
Senator,
And so that's the whole purpose of this, Mr. Secretary. You took a position in support of the earlier rule in 2017. You appear to have flipped on it today. I hope we can work together during this comment period to get to the bottom of this.
I'd be happy to work together with you, and I would ask you to look at our record in pursuing cases against people who've discriminated against protected classes.
But you brought some of those cases under the existing rule, 213, and now you're changing that
Some
rule,
of the
or you're
cases have
proposing
been
to change
brought
that rule.
with
So
disparate impact, and I do
Yeah.
not disagree with disparate impact. It's the way that you interpret disparate impact that's
Okay.
important.
Well, let's interpret it in a way that still allows people to be able to bring discrimination cases where it exists.
And they
Thank you.
still can, absolutely.
Thank you. That concludes our questioning, and before we conclude the hearing, Senator Brown has a statement.
Couple of brief comments. I followed with interest Senator Cotton's comments about removing regulatory barriers to fair and affordable housing like zoning rules. I was pleasantly surprised because several years ago he co-sponsored an appropriations amendment to end HUD's affirmatively furthering fair housing rule because he said it would give HUD too much say in local zoning. That amendment failed. Secretary Carson has recently suspended that rule. On his watch, AFFH would help communities identify and remove those barriers. So I will later ask Senator Cotton to join me in asking you, Secretary Carson, to reinstate that rule. The other comment, Mr. Chairman, I'd like to make is Secretary Mnuchin and Director Calabria, thanks for your comments on a utility model. I look forward to working with you on this and really figuring out how we can flesh out details. I will ask the staffs of both of you to provide technical assistance on a utility model with a regulated rate of return. So thank you, Mr. Chairman.
Well, thank you. That does conclude the hearing. For senators wishing to submit questions for the record, those questions are due in 1 week on Tuesday, September 17th. As for the witnesses, we ask, as always, that you respond to those questions as promptly as you can. Again, we want to thank all of you for being here today and look forward to our continuing work together on this important topic. This hearing is adjourned.
Thank you.